Hello, my name is Jacob Kerr. This is Stephen Archer, and today we'll be talking about cash, brokers, dealers and agents, and securities, chapters 7 and 8 in The Mind and the Stock Market. Stephen, how are you doing today?
Oh, wonderful.
That's good. Anything new since last week?
No.
No?
The days keep changing. I keep getting older.
That doesn't look like it.
Thank you.
Do you have anything fun plans coming up?
Oh, plan on going to Palm Springs to see if we can find some sunshine for a few weeks. So most of February, I guess, we'll be gone and looking for that sun.
Yeah, it's definitely different than the rain going on out here.
Gets a little tiresome after a while.
Gets a little wet.
Yeah, that's right. Yeah.
So I was reading the chapter, one of your chapters, and the title was Cash is King. So why is cash king?
Well, cash is king because it's something you can count and it's very precise. If you have cash, if you have $10 cash, you know you got $10 cash. Whereas reporting earnings or profits of a company may be arrived at in different ways, and not all of that is cash that you can spend, that you can count precisely in number of dollars you have. So the general accepted accounting principles, or GAAP as we call them, allow a certain amount of discretion in calculating earnings, and therefore they may count their inventory differently, they may count their depreciation differently or depletion, and those kinds of things can change the earnings they actually want to report. And sometimes they'll make decisions because of how they want to report and how much they want to report, and sometimes to show that they're a little better than the estimated earnings were before, and therefore you should buy my stock. But cash, they can't lie about cash. They can count it in the bank and it's there. Sometimes then cash is regarded by some security analysts as a very important figure in analyzing particular stock, because they know that that's money.
Yeah.
Real money. And so there is a difference, and although we use earnings, in most occasions, and profits, still, if we have any question about things, we like to see cash.
Exactly.
Yeah.
And so are there any downsides to cash? Or is it all positive, or are there some downsides to having cash?
If the earnings per share and the cash per share are vastly different, then you certainly want to know why there's so much different.
Yes.
And how did they figure earnings that in fact didn't include cash? And so it's more of a question of why, if there's a great difference between earnings per share and cash per share. Analysts who are studying securities always want to know both earnings per share and cash per share. So, and again, earnings per share, EPS, is the total earnings of the company divided by the number of shares of the company that are outstanding. And cash per share then will be the total cash accumulated by the company divided by the number of shares outstanding. I say number of shares outstanding because they do have the ability to, in their charter, to issue more shares.
Yes.
So we only want the shares outstanding, those that have been issued to buyers. So that's why really we want to know both earnings per share and cash per share. Cash per share is used to pay dividends, and we got to have cash per share to pay those. And if the company wants to buy another company or merge it, it may involve cash as well. And we always like earnings, and we compare earnings from one year to the next, which is very important, from one quarter to the past quarter. So we can't do without earnings calculations and computations, because it makes it comparable. Presumably they did their accounting a year ago quarter the same way as they're doing their accounting this year quarter, and we want to know those changes that are occurring in earning. Yet, on the other hand, we also like to know the cash is there.
Yes.
So,
Speaking of securities and stocks, when you eventually sell a stock or security, how do you determine when you should make that sell?
when do you sell a security?
Yeah.
Well, there are different reasons for you wanting to sell a security. If you're an investor, you are investing for some period of time, or usually you have a target price that you want to achieve, and that's very desirable. Say, I would like to hold this. My expectations tell me that they should earn so much money over the next X years, and therefore the price earnings ratio applied at that time should give me this target price. So frequently, if you plan to buy a common stock, for example, you want to know roughly how long you plan to hold that, and roughly at what point you have a target price that you want to sell. In addition, of course, you may sell securities when you want liquidity. That is, you want to convert investments into cash. So when you're approaching retirement, or when you get close to retirement, retirement will require selling some investments in order to get cash. Namely, that's liquidation of your investment. And you want very little liquid shares in order to be able to sell them just like that, promptly and efficiently. So your investment in should be one in which you can count on being able to liquidate it, or liquidate it to sell at any time.
Yes.
So,
And then the chapter after that was about agents, brokers, and dealers. What's the difference between these three professions?
okay. A broker who is an individual, a firm who has a lot of investment contacts. A broker is one who acts as agent for you. He does what you tell him to do. And therefore, he is acting as agent, and he takes a fee for doing that service. And he doesn't own those shares, but he knows where to get them. Maybe he buys them off the New York Stock Exchange because one of their members of their firm has a membership on the exchange, and therefore can buy and sell on the New York Stock Exchange. And therefore, that contact would be valuable for them to actually buy the shares for you. He's acting as agent. Now let's talk about dealer for a minute. Investment dealer is one who owns the securities, and he has an inventory. He's like a shoe salesman. He has an inventory of shoes, and the sale or the transaction is from them to you. And it's not using an agency like a broker does, because he owns the actual the shares. So he may be, in managing his inventory, he may have a lot of shares there he wants to sell. Therefore, he might sell them a little cheaper than otherwise because he has a big inventory. Or if he has a very thin inventory, he's likely to maybe give you a little firmer price in terms of offering them to you. But they sell them out of his inventory. He, in effect, sells those to you from their firm to you. And that's a dealer. Now, most investment firms nowadays act as dealer broker. Namely, they do that. On certain securities, they act as dealer because they're going to sell directly to you or buy from you. And for other securities, like stock exchange securities and so on, they're going to act as agent because they have to go to somebody and buy them for a fee. So that's a difference. So when we talk about an agent, we're talking about somebody, an investment firm, who's going to act on your behalf. We're talking about a dealer. He is someone who wants to exchange securities for cash. Now remember, this is a decision in a transaction that you both want to do. The firm holding the inventory wants to sell. The purchaser or the investment person wants to buy. And if there is an exchange at a certain price, then that's a transaction, and you both got what you wanted. Just like buying shoes in a store. You will see a pair of shoes you like, the store is willing to sell
Yeah.
it that for cash that way, and you're willing to pay that much for it. There's no difference. The firm is really a merchandising type of retail firm. Either from your different inventory, in which case they act as a dealer, or they act as a broker, they go and buy it for you.
Yes.
So, is that clear?
It is. If you had to choose one to become for a profession, which one would you want to be?
Well, you know, dealers aren't scary because there are usually a lot of dealers also dealing in that security. So they have competitive things to worry about as well. They compete with other firms in selling Jones Underwear Company. So there is that competition. They have a market, a digital market where they can see and read all the other companies' bids and ask for that security, what they're willing to sell it at, what they're willing to buy it at. So there are a number of competing firms willing to buy and sell out of inventory or act as dealer. And in the New York Stock Exchange, there isn't really competition directly in a sense, except you're competing against all other people who are interested in buying or selling that security. So it really depends upon the particular security and the company behind it, whether you go and buy as a dealer from a dealer or you buy through a broker. Obviously, most of the companies we hear about when you talk about common stocks of Boeing, Nike, etc., these are stocks that are being bought as agents for you because they're listed on an exchange. And if you want to buy Enlight of Vancouver, before it became public, they may have had a private sale of securities or may have arranged with a dealer to buy and sell them. So, okay?
Fair enough. So depends on the situation is what determines whether you'd want to be a dealer or a broker, pretty much.
Yes, you probably end up dealing with both.
Okay.
And many of the investment firms, probably most of them nowadays, are investment and dealers.
Yes.
Acting as agent when they're acting as a broker, acting as a dealer when they are buying and selling out of their own inventory. So, when I was with one firm when I was a young man,
You still are.
younger, I used to manage for an investment firm its inventory.
Yeah.
Namely, I would offer to buy and sell Red Owl stock, for example, which was a grocery firm in the Big Ten Midwest area. So I offered the price to buy and the price to sell. Now, what I offered that to was buying and selling to another dealer, most likely, or where they're acting as agent because they just want to buy it. And so there is a dealer market in which the prices that stock is exchanged is more competitive and lesser than the retail buyer would pay for the stock. So if you're interested in buying Red Owl stock from me as a dealer, you will get a dealer market or a discount. But then we will take it and mark it up a little bit as part of your fee for getting that stock for him.
Yep.
So
Makes sense.
difference in price. It's like wholesale and retail.
Yeah.
So
Fair enough. Well, thank you for the information you've given us today.
Good.
We've definitely learned a lot about cash, trading, selling, And since you're going on vacation, it's gonna be a while before we see you again. Probably about a month or so, a month and a half.
Okay.
But definitely hope you enjoy your vacation.
Good.
Get some sun.
Thank you.
Thank you for watching. We'll see you when we come back in the mining and the stock market. Thank you.